This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC has withheld media access to reporters from Reuters, Bloomberg and the Wall Street Journal to cover a meeting of oil industry CEOs with energy ministers from OPEC and its allies, reporters and several people familiar with the matter said on Wednesday. The three media organizations are among the world's leading suppliers of financial news and information. They compete to cover news in real time from events such as OPEC Plus meetings, which can have a material impact on the price of oil and the global cost of energy. The OPEC Plus includes top oil producers Saudi Arabia and Russia. OPEC Plus pumps more than 40% of the world's oil supply.
Oil prices fell on Thursday, paring some of the previous day's gains, as investors took profits on concerns of further interest rate hikes dampening economic growth and global fuel demand, while weak economic data in China also weighed on sentiment. Brent crude futures declined 26 cents, or 0.4%, to $73.77 a barrel by 0647 GMT. U.S. West Texas Intermediate, WTI, crude futures slipped 22 cents, or 0.3%, to $69.34 a barrel. Both benchmarks climbed about 3% on Wednesday after the U.S. Energy Information Administration, EIA, said crude inventories dropped by 9.6 million barrels in the week ended June 23, far exceeding the 1.8 million barrel draw analysts had forecast in a Reuters poll.
Moving on to the top news in the energy sector.
China, already the global leader in renewable energy generation capacity, is racing ahead in building new wind and solar farms, but progress is slower on its showcase wind and solar mega bases, a think tank said on Thursday. China had installed 365 gigawatts (GW) of wind power capacity and 392 gigawatts of solar capacity by the end of last year, about a third of the world's total. It looks set to reach a total of 1,200 gigawatts of wind and solar energy by 2025, 5 years ahead of a government target, U.S.-based think tank Global Energy Monitor, GEM, said in a report, thanks to generous subsidies and a low-cost supply chain.
Dutch and British wholesale gas prices fell on Thursday morning as expectations for higher output from wind farms curbed demand for gas from power plants. The Dutch benchmark front-month contract was down 1.23 euros at 32.90 euros per megawatt-hour, MWH, by 0917 GMT, according to Refinitiv Econ data. The Dutch day-ahead contract was 1.58 euros lower at 33.05 euros per megawatt-hour. The British equivalent day-ahead contract fell by 3.5 pence to 82.00 pence per therm.
Next, we have the top news in metal markets.
China is set to export the most steel this year since 2016, say analysts, as the weakening yuan and competitive prices help the world's biggest producer offload surplus metal due to weak demand at home. China's massive steel industry has been hard hit by a months-long slump in the country's huge property sector, pushing steel prices to three-year lows in May. But strong demand mostly from Asia and Africa is helping keep a lid on stocks and allowing mills to continue operations.
Regulators urgently need to fast-track approvals for new mines and the renewable energy projects to power them to ensure the supply of minerals essential to averting climate change, gold miner Newcrest's interim head said on Thursday. We are urgently off course and we need to course-correct immediately, Sherry Dewey, interim CEO of Australia's top gold miner and a former oil industry executive, told a mining conference in Brisbane. The mining industry needs to bring online the equivalent of 17 more Escondidas, the world's biggest copper mine, by 2050, to meet demand projections, she said as an example of the scale of the problem. We will now look at the top news in the agricultural sector. Cocoa prices surged to the highest in 46 years on the Intercontinental Exchange in London on Wednesday as bad weather in West Africa threatened production prospects for the main suppliers of the primary raw material used to make chocolate. The benchmark September contract for cocoa in London gained more than 2% on Wednesday to £2,590 per metric ton. The session high was the highest price since 1977 at £2,594. Prices are rising in reaction to a tight market for cocoa beans, which are mainly produced in Ivory Coast and Ghana. Arrivals of cocoa at Ivory Coast ports for export are down nearly 5% this season.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.